Thank you for joining iMeet. When you hear the tone, you will be the 15th person to join the meeting. This meeting is now being recorded.
Hey everybody, good afternoon. This is David Blake with the Tuesday Tech Talk. And this is your first time here. We usually spend a little bit of time talking about the last couple of days in the market, what we expect over the next few days, and then we open it up for questions at the end of this. I usually talk about 20 or 25 minutes, and then you can ask questions about individual stocks or perhaps things that we're going over during the week or during the meeting here. Hold on a second here. I'm trying to close something here. Oh, can't see it. All right, anyway, let's just go ahead and get started here. We've got a lot to go over. Last week, first thing we're going to do is look at the Dow Jones. As you know, last week we broke out to a new high. We're close. We're at a new high again today. We're up 124 points right now, but the CTI was a -4. Which is keeping us at a neutral position for the market posture. We'll be -4 also next week, and then we're going to ease down to a -5 the week after that, and then it looks like the CTI will go bullish again. So if we're going to have a little bit of a pullback, it would probably be either next week or the week after that. Okay, we have a nice trend line going up here. Let me grab my little marker. We have a nice trend line still going up here, going back from towards February of this year. We've bounced off of that, which coincides with the 100-day moving average. We have a little bit of resistance up here around 21.6. Our target actually is this 21.8 area above here. So we have about another 150 points till we can get to the target price that we wanted to go. Momentum was up a couple points last week to a neutral +1. That was up from the negative -1, and sentiment is negative -1. That's also a little bit bearish. That's the reason that is bearish is because you had the percentage of bullish investment advisors jump up to about 58, 59, which is a pretty high reading. That means that the professionals and all are getting a little bit too bullish on the market here. And we also only have about 16% of the advisors are bearish, which is a really low number also. So getting a little bit frothy on the sentiment, which is happens towards market tops. But as far as that goes, here's the indicators on the Dow. Kind of neutral, despite going up to new highs. We're not getting overbought really. The 30-day stochastic, which I like, has pulled back below 80. But, nothing that looks like a pullback on this. Here's the NYSE AD line. A big jump over here. The week before, we jumped up over like 3,500 units, picked up about another 1,500 last week. So that's supportive of a higher market in here so far. We consider this kind of a leading indicator of market direction. Here's the S&P 500. Again, a nice trend line going back here from the first of the year. And you can see over here where we were talking about having a little bit of a pullback. This is kind of during the tech wreck, but we broke out of this triangle pattern to new highs. We hit new highs today. Our target on the S&P 500 was 2480, and we actually have hit that today. So we'll see if we can come up with some upside targets by Friday. Momentum looks much better on the S&P 500. Again, supportive of higher prices. This is headed up. As you can see over here, we often talk about, if you're new on this, when you look at the 14-day RSI, not only can you find overbought and oversold areas, but as long as this 14-day RSI stays above 40, you're still in a bullish trend. So we had this thing coming down. I think we only hit about 42 or something like that on that, which meant that the bullish trend was still intact, and we bounced off of that area and headed higher again. Again, you can see the accumulation distribution also moving higher. A little bit overbought at a 30-day stochastic. It's up above. It's right around 92 or so. That gets above 90. You are a little bit of overbought, but that still looks good. Now here's the NASDAQ. Again, you had the tech wreck coming in here, a little bounce back, coming back down. We broke the 50-day, bounced above that, and here was another triangle pattern that we broke above about 10 days or so ago. And in fact, I think right around this period, the NASDAQ put together a 10-day win streak. I think it broke it last Thursday, I believe, and we're back on another win streak today. Our target on the NASDAQ was 64.50, and we're at 64.15 right now. It's actually underperforming the other indexes. Transportations are up 1.11%, the Russell's up 1%, and the Dow's up a little bit over 0.5%. So the NASDAQ's taking a little bit of a breather, which is fine. I mean, after a move like this, it's due for a little bit of a break. But some of that, a lot of this is some of the biotechs have been busting out, which we talked about last week also. And here's the and also the momentum on this, on the indicators, still very strong on this thing. Here's the 14-day. Again, even with that tech wreck, we only got down to about 45 on the 14-day RSI, which meant that the bullish trend was still intact. So that's something you want to keep watching. And here's the NASDAQ advanced decline line. Again, we had this big breakout here about 2 weeks ago after the tech wreck, and a little bit of a pullback the last day or two. But this is again supportive of higher prices on the NASDAQ, but we are overbought. No denying that thing. So another thing I wanted to bring up real quickly. This is the NYSE 52 new week highs versus the 52 new week lows. You're seeing a nice expansion in that. The new lows are coming down here, So you have a nice expansion, which is also supportive of higher prices. This means that there's more and more stocks that are participating in the up move. What you don't want to do is see the market making new highs when you're having something like this where it's contracting, which we did have here a couple during the tech wreck, but we turned it around and moving up nicely here. Now, one of the things that we have, if as a subscriber, if you haven't gone to the new beta site to try it out yet, on the home page, we've now included something called the S&P short-term oscillator, which you'll hear Jim Cramer talk about occasionally. We now run that for S&P along with the trend line books. But on the upper right-hand corner of the markets page on the beta site, you will find the S&P short-term oscillator. It actually hit 5.6 either last Thursday or Friday. That's basically extremely overbought. If you read the daily market comment, we talked about that briefly and said that when it hits that, you can pretty much count, at least on the next day or two, you're going to have a little bit of a pullback. So if you're thinking about buying when it gets up in there, just step aside for a couple of days and you'll get a chance to buy most of this stuff a little bit earlier. But that's something that's included now on your subscription, and you can follow that again on the new beta site. If you haven't gone to it, when you go to your markets page, there's an option there for you to click. We'll send you a new password for the beta site to allow you to go in there. There's some really nice features. And in fact, over the next week or two, what we'll probably do is do a demo of the new site while for our webinar. Or else we may just do a separate webinar on that so you can tune in and go over the different pieces of that. So I hope you enjoy seeing that. Okay, next chart we want to look at. Here's the Russell 2000. We broke out of this long-term trading range that we were in, which was kind of interesting because normally the small cap index would be the index that you want to see actually leading the broader market. And this move we've had since January or last November, a lot of the action has been in the big cap tech stocks, the Google and Facebooks and stuff like that. But perhaps I think we're starting to see a little bit of outperformance in that. We broke out of the trading range. Momentum is starting to pick up. Even while we were going sideways in here and down again, you didn't get this the 14-day below 40, which means the uptrend was still intact, and the 30-day stochastic also was kind of going sideways to higher. That's something that we like in that. And again, with the Russell 2000, this group should be one of the main benefactors of any type of tax reform that gets done with the Trump administration. Also, infrastructure plays where you get a lot of smaller companies participating in some of the build-out. And now here we have the Dow Jones Transportation Index. Again, if you were looking at the market comment last Friday, we pretty much thought that this thing had pulled back to the pivot point, and it may have bottomed last Friday, and it looks like that was the case. And today we're up here at 95.20, so we have a nice bounce off of that pivot point. I'd like to see this thing maybe move up to new highs again. You had some negative momentum here, but you didn't break. You got down to about 40, 46 or something on the 14-day RSI. You went below 50 on the 30-day, which is kind of a sell signal, but we turned around pretty quickly on that. So transports may be coming back into a sync. Part of that may be because of what we're going to talk about here in a little bit about about commodities and all that. The airlines have had a rough time, and also the railroads. But as commodities pick up, a lot of times you'll see the transportation index pick up because they have to move the commodities. A lot of our economy is service-oriented and technology, but at some point you still have to move the copper and the iron ore and all that kind of stuff to get things built. So what I want to look at, we did this last week. If you tuned in, hopefully you made some money on some of what we talked about last week, because we talked about materials was a place that you wanted to be in. We also, if you've been following these webinars, I've been bearish on oil for a long time, except when we hit the bottom of our channel and we would get a nice bounce. And I said last week that I thought that oil was probably due for a little bit of a rebound, maybe up to the 50 to 51 area. How much further it goes from that, I don't know. But I think we can still play the oil stocks a little bit in here, because I don't see the pullback coming right away. We'll go into that a little bit more about why that's going on. Surprisingly, we had a little bit of more of a move in the financials than I expected, because we're seeing a little bit of a bounce in the 10-year today. This may also be because some investors or traders may be looking for more of maybe hoping that Yellen will give a little bit more of a hawkish tone as far as when interest rates would rise again. Right now, I think it's about a 50-50 that they even rise in December, but we'll have to see. The next meeting after the one that ends tomorrow is in September. So we'll see if she has a little bit more of what she says about that tomorrow when she gives her announcement afterwards. The materials were up 1.31%. We had healthcare up over 1%, and also last week we showed the charts on the biotech industry. In particular, we looked at the iShares Nasdaq biotech ETF. It was IBB. Was that? This is the wrong symbol for this. This is the NYSE Biotech Index is up 4%. IBB is the Nasdaq biotechs there. But energy, materials, and healthcare, especially the biotechs, is where we talked about last week, and show you some stocks that you'd want to be in with that, and that continues to be the case. Today we're seeing a lot of companies like Caterpillar, Freeport-McMoRan coming out heavily into the emerging markets in the materials sectors and all, that are outperforming and having some big pops in here. In fact, Freeport-McMoRan's up 15% today, up $1.92. That's not bad on a $13 stock. So good luck. Glad if you own that thing. Okay, well, we'll look at first. Now, here's the energy sector. We looked at this again last week, and I thought that we had a chance for a breakout in here. Now, this is a descending trend line from last December. Came down here. We broke above it. We came back down here, kind of tested the trend line, which was good. We didn't break it. And then we popped back up above the 50-day. Next resistance should come in here around 57, I guess. Yeah, 57 or so. And then we make a run. That's around the 100-day moving average. And I think we'll get up to that. You're starting to see some nice improvement in the technical indicators. The 30-day stochastic is back above 50, moving higher. And one thing I would like to see a little bit more accumulation down here. We do have some. We looked at this last week where we get broken above this little trend line on the accumulation line. I think we'll probably see this thing moving up a little bit more as energy goes up. We're today at energy's up almost 2% today. So you're going to see this thing break above that. So I hope you bought at some of the oil stocks in here over the last week or so, because I think we still have some upside to do on that. Okay, now we have the, in fact, here's the oil index. I brought this in. Again, you can see the breakout above this descending trend line with the momentum indicators all moving up higher, crossed above 50 last week, broke out of that channel. We're up above the 50-day, gapped up today. I think we're much higher than this even today already. So we'll have a little bit of resistance up here at the 100, and then we may have some clean shot up here to around the 200. Again, I think that the stocks that you want to own here, like the Halliburtons, especially the refiners, are the areas where you want to be with that. They're going to, and also some of the exploration stocks. The next one over here, that we talked about last week, said this is where you want to be, is materials. Again, we also had a gap up on materials. Materials are up almost 1.25% again today. We've had quite a run over here in the last 2 weeks on this thing. Bounced off of this little trend line here. This is a crossover here, but we're breaking out the new highs on that. Momentum is strong. The indicators are supportive of higher prices, and you're seeing another pickup in accumulation on the materials. Again, we'll talk a little bit about this and why this sector is breaking out in just a minute here. And this is what I hope you'll get out of this today. Now here's copper. This is copper, again, one of the big materials. When you're building houses, when you're building buildings and all, you got to have copper in it. We're getting a push up here towards the high of the year. This part of the reason that we're going to, and we'll talk about this in a second, but part of this is due to the weakness in the U.S. dollar, which we talked about last week, and we're talking about some more again today. Here's your momentum indicators all moving higher. This is across 80. That's a buy on the copper. And again, look at the accumulation in copper, which means this is supportive also of higher prices. And we'll look at a couple stocks that, besides Freeport, that you can be included on in some of your investments. All right, here's gold. Gold is also in the materials sector. Kind of a range bound with gold, but it seems like I think gold should be going higher. We're getting a nice pickup in the indicators. We got a cross above the 50 marker in this 30-day stochastic. Here we had a little bit of some profit taking on this thing here, but we're starting to work our way higher again. Gold and silver are probably a place where you may want to have some exposure to. And this I also brought up here. This grouping of lines, we talk about Fibonacci retracements once in a while, and a lot of times when you have a pullback, you want to find support at the 50% retracement. So from this move back in November to the highs up here in April and June, we've now pulled back to that 50% retracement area, and we bounced off of that, and we're heading higher. We've crossed over the 62.8% retracement also, and this thing usually when it does that, and we've crossed above the 150-day moving average in gold, you usually will get a complete move of this whole pullback once you bounce off of that 50-day and break that 62. So I expect to see gold work its way up probably to the 1290 area, which is going to be good for gold mining stocks. Stocks like ABX and GG. We can look at that if you want me to look at that later on. Those should probably outperform going forward a little bit in here. All right. Now this is a chart we looked at last week that we talked a lot about, and this is the ETF for the U.S. dollar. It's UUP. And what this is, you see this downtrend. I took this out, and this is a weekly chart going back about 3 years. You were in this trading range for a long time. We started to break out to a new high right after the election. People thought we were going to get the tax cuts. We were going to do all this infrastructure. The dollar was going to get stronger. Rates were going higher, blah, blah, blah. And then the Trump administration, we've kind of stalled out on this. And as you can see, since the first of the year, it's been working its way lower. I think probably we're going to find support in this thing around 24. We talked about that last week. Right now, UUP is at about 24.34, so it's still hanging in here. That 24 area also represents the 200-week moving average, and I think that probably should hold. I don't, as strong as the economy is, I don't think you're going to see, much below that. If you would, that would probably point more towards that the economy has already peaked and we're going to start to slow down. But you can see, it's weak all across with the momentum indicators, very oversold. And also you're seeing now everyone wanted to buy it over here after the election, and now you're rolling over in the U.S. dollar, and they're kind of looking at other currencies. But when you have this weaker dollar, and we just looked at some of the materials and energy sectors and some of the industries that make that up. When you have a weaker dollar, it causes the pricing of commodities to go up. This is intermarket analysis. John Murphy has a book that if you don't have it, or if you want something to read to help your investments, John Murphy has this called Intermarket Analysis and Profiting from Global Market Relationships. And he talks about in intermarket analysis about how things should work. Now, they don't always work, but what's important to do is when you see that the relationships are working as they should be, that's when you want to jump in and you can profit from. Like when the weaker dollar is causing commodities to go up, then it's working the way it should be, and that's when you're going to profit on these things. Now, gold, usually when the dollar starts to get weaker, gold is going to turn, usually Murphy says, about 4 months before the rest of the commodities. In this case, it's the rest of the commodities have already turned a little bit quicker than that. But trying to find my notes in here. When you get this weaker dollar, certain elements of the market that are going to outperform, and including the commodities and energy and oil and commodities. But also another part that's going to outperform is going to be the emerging markets, and the reason being, a lot of these emerging markets, and we're going to include Canada and Australia, because their economies basically benefit from an uptick in commodities. That's what they export. As they can export more copper, more gold, more oil, that helps their economies. And the weaker dollar causes the price of these commodities to go up in price, which means they're going to get more as they export their products. And that's why you want to own some of these ETFs that we're in here. Here's the CRB index. So you can see we had a problem here, got oversold right over here. This time period right here was when everybody pretty much thought we were going to the dollar was going to turn around and bounce back up, and we were going to get higher rates. And once the higher rates started to come off the table again, then you started to see the CRB index move up. Now, CRB is a little bit more weighted in a lot of the minerals, but it also includes agriculture products, beef and wheat and that kind of stuff. So it's not getting quite the bounce that you're seeing in some of the more material types and mining types of commodities. Now over here, this is EEM. We talked about the emerging markets, and you hear it a lot on TV. Because the emerging markets are where you want to be. Okay, this sideways action over here is when we're talking about doing is the dollar going to go higher? Are rates going to go higher? We want to see what happens. So you had a little bit of a ascending triangle over here. We broke out, and once they decided that we weren't going to, Yellen gave her testimony here about 2 weeks ago that she had to watch it. We weren't going to probably be in such a hurry to raise rates. They were probably going to stay lower for longer. We saw this couple gaps up. And that's where we're at right now. We're going sideways right here because, to be cautious after a move like this, you want to see what she's going to say tomorrow in her announcement, whether she thinks that September may be still on the table or something like that. If she comes off a little bit more hawkish, you would probably see the emerging markets come down. Now, if you want to know what ETFs you can buy, if you don't want to just buy the EEM, different ETFs that get their economies grow from commodities. You have like Mexico, South Africa, Russia, Brazil, some of the South Asia companies, but also Canada and Australia also are big benefactors of higher commodities. Okay, here's Canada. You can see over here is it was kind of going here. Rates are our dollar's going to get stronger. Whoops, no, it's not. And now you see the Canadian ETF spiking higher over here. supported by the indicators look strong, momentum's strong. And you can see, I think this is still an early part of this move if commodities stay high. You see that a lot of people were selling thinking that the dollar was going to get stronger, and when it didn't, now they're starting to accumulate EWC. Here's Australia, EWA. Again, you had this little bit of a range-bound thing, maybe working a little bit higher. Here's the accumulation. They're buying Australia. And here we have the gap up once it was kind of clear that rates were going to stay lower and commodities can move higher. You see this big gap up in Australia. So what I want to do, if you have some questions, I want you to go ahead and start putting them in. But we talked a little bit over the last couple of weeks about where can I find some ideas for the things we're talking about. And last week we talked about several areas that I like. If you go to the advanced tools and you go to the point and figure breakouts and early alerts, and you look at the stocks that come up in there, and you can sort those by the power rating, which is our relative strength rating. Get some of the stronger stocks that show up there, and then you want to go down that list and you want to see, okay, what stocks do we have in here that are materials? Which ones are in the oil? Which ones are gold stocks? Which ones are copper stocks? Today you had CMC came up in one of the breakouts. It's commercial metals, I believe it is. We'll look at some of these charts. SCCO, you had Southern Copper showed up as a new buy. Murphy USA, it's an oil stock, MUSA. You actually had EZA, which is Australia. That's South Africa. EZA came up as a new buy on the upgrades. If you go into trading ideas and look up the daily upgrades, again, you'll see several stocks. Here's LPX, Louisiana Pacific, for lumber, another commodity that's going up. BG, Bungie, I think they're in fertilizers. That's more commodity stuff going up in materials. So these stocks are showing up every day. FCX came up as a buy after we talked last week, like last Tuesday, Wednesday, as a brand new buy. You can look at those things for short-term trades. What I try to do is on the stock daily upgrades, I'll look for the stocks that have at least a 1.03 or higher on the 50-day relative strength, because that means they're outperforming the market and the technical indicators are strong enough that they should get a pop. Now, some of those stocks you're going to look at and they're going to say stocks is overbought, wait for a pullback. And that's based on the computer reading that says stochastics is over 80. But stochastics, when it gets above 80, and it's only overbought when you're in a trading range market. Like if you got right in this area right here, if you have a stochastic that went up to 80 and came back down, if it's going like that, I'll pay attention to it. But when you have a trending market, some traders will buy the stock when it gets above 80. And the reason being because they figure a lot of the mom and pops are selling their stock so they can get some cheap stock before the move continues to go up, and they'll go into use the stochastic as a buy at 80. The reason it's overbought is because it's strong and people are going into it. So that's just something you may want to look at. But that area of some of our modules are where you can find some of these daily ideas. You look at the materials, you look at the energy, you look at biotechs. You'll find some small stocks that come up there. Take a look at the chart, and if they're trending higher and the indicators look strong, go ahead and play them for a couple of days, for a week. And then if you do get the breakout where something's going like this, they'll sell part of your position and look for something else to go into. Okay, I want to get your questions ready right now. But just while I was talking about while you're writing your questions, here's some of the things that we were just talking about a minute ago about where you can find some of the ideas that are showing up. Okay, a commodity-driven economy. Here's EWW, Mexico. We just broke out of this, of the highs from back here last summer. Now we're breaking out on this thing. A little bit overbought on the 14-day, but I'm not really worried about that. You're starting to see some nice accumulation. That showed up as that. Here's Freeport-McMoran. Showed up over here last week around 1275.13 as a new buy. And we got this move up here. It's actually, I think this is at 15 now. We hit 14.96 today, so we came all the way up to here on Freeport. You got about a 15% move off of that. Here's Caterpillar. Caterpillar it's actually been long for a while, but again, you had this spike up on the earnings on that. Caterpillar gets most of their earnings overseas now. I think about 70%, and a lot of that is in these emerging markets. So that's stock that you're going to benefit from a weaker dollar, and the weaker dollar also helps multinationals. So when the dollar was going up, we said you want to kind of be light on these companies like McDonald's and Procter and Gamble to get their a big chunk of their revenues overseas, because when they bring back their earnings, they're going to have a currency exchange problem, because they may have made 120 euros, but when they bring it back, they're only going to get $100 or something. So it cuts into their earnings. But here's John Deere. This one hasn't had the gap up yet that Caterpillar has, but they do a lot of business, not quite like Caterpillar, but they, as far as building the infrastructure and doing business overseas, John Deere looks good. Here's that Commercial Metals. We just got an upgrade over here. It's just starting to break out. Nice looking chart, working its way higher, coming out of this resistance, the descending trend line. You can probably get a little bit of a trade of this thing up here, at least to 22 maybe. That came up today. Here's SCCO, a little bit late on this one, but we were having this problem here. As soon as it broke through this, you got the upgrade on that. Looks strong. It's one of the copper stocks. MUSA, again, it was up. We had this upgraded today. You got a couple dollar pop in this thing earlier. This is one of the oil stocks that has been working out well. Here's EZA came up as a buy today. South Africa ETF. Again, you have a play on the commodities. Here's LPX came up as a buy over here today. What's that stock doing today? Again, this is another commodity play that you could look at. It's not doing anything today, but it may be ready to make a move. And again, you broke out of this triangle pattern, and that's probably going to work its way up to another 52-week high. Okay, I see a lot of questions coming in here, so we're going to try to write them down here and see if we can get to them all and get and move through. Is there a way best to speculate on a rise in the VIX when conditions are right? Would it be through out of the money calls in the VIX or something else? I was going to talk about that right now, but here recently. You still got the VIX coming down here almost at all-time lows. At some point, when this thing, you're going to get a hiccup somewhere, that this thing's going to spike. The problem is if you're buying options, you're going to there's a tendency, you're going to have that time drag, and you just don't know. I mean, if you're looking at the VIX, you look at the Dow or something like that. Perhaps you would have started buying options on the VIX back in maybe February or March, and things just keep going straight up. So, if you can send me a question on that later on, I'd get into that. But I've lost some money trying to hedge myself with the VIX recently, and right now we'll talk about maybe that possibly next week and go into a little bit more. But I'd be more inclined to look at an ETF than an option on that. Okay. Here we go. Can you speak relationship between higher or lower rates and the dollar? Linda, I hope you did get that. As rates go up, that helps to strengthen the dollar. When Yellen started talking about we're going to keep rates lower for longer, much longer than maybe we thought, and she started taking some cuts off the table, that's when you saw the 10-year yield in the Treasury drop from about 2.55 down to about 2.25. That was a pretty big move in about a week and a half, and that was basically because the dollar was weakening. Now, some people might say, well, it's because of it's all Washington. It may be Washington, but it's all they're in their inability to get something done. It could also be that we're going to have some pretty hard comparisons going out here another couple quarters, with earnings being so strong as they are here the last couple, that the comparisons are going to maybe back off, but you may have a little bit of slowdown coming up. Maybe that's why the dollar is going down. Okay, what is the ETF for XOI? There's a couple of them. USO is one that you can look at for oil. Another one is XOI. It's a USO. I think this OIL also is an ETF. that you can look at to play. They're pretty cheap. They're around $9 or $10 a share at this stage. Google and Microsoft. Okay, we'll look at those. I'll have to share the screen for that. But yeah, you can also, you know, I think I would probably, rather than buy the oil ETF, I think I would rather buy like a Halliburton or some of these other oil stocks, Murphy or something like that. You can go in there and look at the industry group analysis, go to some of the different oil industries, and just take a look to see which ones are rated long with a score of 0 that haven't gone up like 15, 20% over the last like 10 days, and I would look at those. Okay, I'm going to close my screen down here. So then, why is XLF going up on higher rate expectations and all the commodities? Emerging markets doing better also. Well, I think you've had a little bit of a rise in the last week and a half, or last week, because we're going into the FOMC meeting. It starts today, and it closes up yesterday. We've looked at the chart on XLF, and we can look at it again, where I said, you may have a little bit of a pullback as rates come down, but you do want to have exposure to financials going forward. I was saying, if you had that big run up, where if you wanted to take a little bit of money off the table, fine, and then if it pulls back, you could add to your position there. I still think that if you have some spikes in the XLF, that you could play that a little bit, and you may be a little bit more range bound rather than just a trend now it's going to go up, because I don't see the dollar moving much. And I think if Yellen comes out, and she just gave her testimony a week and a half ago, so she's not going to have any surprises that she's going to announce tomorrow. The data that's been coming in has been mixed, and she should stay on an even plateau where she was last week, and that may cause the yields in the 10-year Treasury to back off a little bit, and that would probably cause some weakness in XLF. But I think right now, if you're a trader, maybe you bought the XLF on. You had solid earnings from a lot of the banks, but maybe you're thinking that if she does say she's going to, September's on the table, you'll see rates go up, and you can get a trade on that to the upside. Okay, let me lock this thing down here real quick. I'll share the charts, and we're running out of time. But okay, let's look at Google. Nothing wrong with that. As you can see on this thing, if we're going to draw some things in here, Google I don't think is a real trading stock either. You had this descending trend line here. You started to break that going into the earnings. You're getting some breakout here on the momentum. Everything looks stronger on that. You've kind of broken out here. Why wouldn't you go to new highs? You got to consolidate when you get overbought, but I'm surprised with this. This is kind of showing that you don't have it's up some, but on the smart chart, if you look at the 50-day up-down slope, you'll get a little bit more accumulation showing up in Google. Of course, it's overbought. At some point here, you're going to have somebody take over. Wait a minute. This isn't Google. This is the my bad. This is Freeport. Not sure what happened there. Okay, here we go. Okay, here you go. You gap down. My bad. Okay, I see you gap down, but look at this. You gap down to the 50-day moving average. You're still above the pivot point. You had a double top here, which is a little bit concerning. But here's the accumulation distribution line in that. You're still above, right around above 80 on that. I think probably the fact that it held on this holding right around the 50-day moving average is a plus. I would think more people would be inclined to buy Google when it's come down here to the support level, and your risk would probably be a little bit more just market risk than the company itself for the long term. We're down here again, like about $30, $9.68. we're just holding right around here on that 50-day. Your downside on that might be, $20, $30 percentage-wise. That's not much to the downside. If you've been wanting to own Google for a while, maybe you buy part here, and you get down here, you buy the second half of your position on that. Okay, Microsoft. Breaking out the new 52-week high, you're up again today. Good accumulation distribution. You always want to see that. You're at 91, above 90 on the 30-day, which means it's a little bit overbought. After a move like this, you might want to see if you could maybe get a pullback to this area, but you probably should have bought Microsoft back here when you had this breakout back in April and May, because it's been pretty nice from there. Microsoft goes longer. All this cloud stuff that they're in, they're just making more money now than they probably ever have. So you gotta like that. I wouldn't know that I'd be chasing it in here, but you had a heck of a move. All right, real quickly then, 2 more questions I'm going to say. That's FCX. Yeah, you're right. Okay, not Google. My bad. Okay, I don't see any more questions coming in. I've gone way over the length here today. I appreciate you taking your time out of your busy day to join me on this. I hope you did get something out of it. This intermarket analysis stuff that we talked about is something that I would highly recommend John Murphy's book. If you read that, it can only help your investment opportunities going forward, and it helps you to see when this is going on in the market, this should be going on. They don't work all the time, but when they do, that everything's working proper, everything's in sync, and that's going to really allow you to make money. I'll always have 3 or 4 or 5 things that I'm watching to see with the relationship if they're working or not, and when I see that they are, that's where I really make a move. So thanks again for joining me. I hope you got something out of that. The name of the book, please. It's Intermarket Analysis, Profiting from Global Market Relationships. And it's by John Murphy. And you should be able to find that at any Barnes & Noble. If you can't, Wiley, W-I-L-E-Y, trading. If you Google that, you can order the book online through that. Or I'm sure Amazon would have it also. So again, thanks for joining me. I hope you got something out of it, and you have a profitable week. Bye-bye.